Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for Now Explain Rough Cut. So now, let's get explaining. Bank Payments Daybook, what it is and why we need this daybook. Manual bookkeeping, pen and paper bookkeeping. We're using daybooks, the books of original entry, also known as first entry or prime entry daybooks. We're collecting information from the source documents. What is a daybook? A daybook is a list of your transactions, invoices, payments written down in sequence in a book. In days of old, this was done daily. Each day's sales were written into a book, so we get the term daybook. Related daybooks: the purchase invoice daybook, the purchase credit note daybook, and the bank receipts daybook. Similar and related terms used: suppliers, creditors, accounts payable, they're interchangeable. Money out, electronic funds transfer, EFT, payment, disbursement, check, terms used with money. A daybook imagined by you. What a modern daybook looks like: a big red book. Often these modern daybooks are referred to as big red books. Why big red book? Because some of these red books can be very big. Why are they big? Depending on how many columns you need. More columns, bigger book. Maybe this big. This book has 30 analysis columns. The columns will be very narrow. Inside, an empty bank payments daybook. Example of a bank payments daybook. This is our first bank statement. Here is where our bank payment details are shown on our bank statement. We have 3 checks and an EFT. Here is the bank statement with an explanation of the payments. The 1st, 15th and 31st of January transactions are checks written by the business. These are checks 1 to 3 from the checkbook. The bank statement will not show who the checks were paid to. Who this was paid to should have been written on the check stub and also written into the bank payments daybook. The 31st of January transaction is an electronic funds transfer made directly out of your bank account. You won't know it's there until you get your bank statement or check your bank account online. You will have given an instruction to the bank to transfer an amount of money to the director's bank account. You would have had to supply your bank with the bank account details to transfer, pay the money to. Here are the bank payments on the bank statement with the daybook entry side by side. You can see the information taken from the bank statement and from the checkbook. Explanation of the bank payments daybook columns: the date of the payment, payee, supplier, the name of the supplier or payee who you paid money to. Payee could be a tax payment or a bank loan repayment. Reference, a reference to identify how the money was paid out. Example, EFT equals electronic funds transfer. 1 is equal to check number 1. Total, the total value of the money paid out to the supplier or payee. Explanation of the bank payments daybook columns: totaling the columns. Any column that contains values must be totaled. By totaling each column, this allows us to see what the total payments are for the day, week, month. In this example, we are seeing the monthly payments, money out figure. This bank payments daybook lists the 4 bank payments for the month of January. We have 9 analysis columns. Can we have more columns? Yes, add analysis columns as required. Listing where the money was paid out to in separate analysis columns makes it easier to identify where the money went. The analysis will be used later when completing the general ledgers and supplier ledgers. And that's how you set up a basic payments daybook, and why this bank payments daybook is set up as shown using these columns: the date, the supplier payee, reference, total, and 9 analysis columns. This is a bank payments daybook layout. You can add more analysis columns if required. Thank you for watching.